Hello and thank you for joining us today. My name is Wesley Boudreaux, one of the Chevron focused advisors here at the Retirement Group. They're going to give you our monthly quick update on the interest rates and how they're affecting Chevron employees for the pension lump sum calculation. Quick reminder, the Retirement Group, we've been doing this for quite some time, but we are not employed by nor endorsed by Chevron. But should you have any questions, feel free to reach out to us on this or any other topics. We'll be happy to dig into them for you. And for those of you who do not know who the Retirement Group is, again, we are an independent financial advisory firm that focuses on working with corporate employees and help them transition to retirement. We've been doing this for about 30 years, and for a large chunk of that, we've been working with ExxonMobil employees and retirees. So if you have any questions, it allows our advisors to have a deeper understanding of your pension plan, your 401k, your healthcare, retiree, medical, life insurance, all those transition options to make sure you have a good idea of where you stand and help you transition into retirement. Now, we do have offices throughout the country. Rest assured, if you need to sit down with somebody face-to-face, we can probably accommodate that. But obviously, this day and age, it's pretty easy to have web meetings, phone calls, emails, whatever your preferred communication is. Just let us know. And at the end of the day, if there's anything you take us up on, is that cash flow analysis. It's a complimentary financial plan detailed to the Chevron benefits. So it'll help you determine the best day to retire. You can come to us, tell us you've got a specific date in mind, or maybe when you turn 60, or a son graduates college, or something like that. But we can run that initial analysis, and then we can look at alternatives if you want to see if I can retire earlier, or if you have to work longer. We won't shy away from telling you that as well. It also allows us to give you the run side by side the pension options, whether it be the annuity or the lump sum, help you determine all those. So just if you can spend about 5-10 minutes with us gathering some data, we can give us about a week. We'll get that put together for you and get it back out to you to run through all your options and also tie into these interest rates and how that is going to affect you on your retirement decision. So again, quick reminder for those of you that don't know, the Chevron pension plan is a classic defined benefit plan, in which case there's a formula looking at your years of service, your final average pay, and a multiplier and a Social Security offset to determine how much they're going to give you on a monthly basis for the rest of your life. Let's say you run that number and you're going to get $4,000 a month for the rest of your life. From that point, everything else is calculated off of that. So if you're looking to do a joint survivor or period certain or something like that, it's going to be a little bit lower because it's covering either 2 lives or covering a guaranteed period on there as well. What we're going to talk about today is the pension lump sum. If you say, hey, I don't want the annuity Chevron, I want to take my money, manage it myself, work the retirement group or something like that, because I think I can get more out of it, or I want more control over it for my beneficiaries. There's a lot of pros and cons to that we can go through with you, but that's where they use interest rates. And if you take a look at the seesaw, when interest rates are lower, the lump sum is going to be higher. When interest rates go up, which they have over the last year, your lump sum is going to be lower. So we saw those interest rates come down quite a bit during the pandemic, which drove up to the highest lump sums we've ever seen. And on the flip side, last year we saw these interest rates skyrocket pretty quickly. We knew they were going to move up, just maybe not that quickly or that high, but what happened is they moved up last year, so they've driven down those lump sums. And we've got a little bit, they kind of subsided a little bit, so we'll see how the next couple months play out. But what happens is they use 3 different segment rates. And there's a first, second, and third segment. And those interest rates, the first segment correlates to the first 5 years of retirement. Second segment is going to be for years 6 through 20. And the third segment is going to be for years 21 and beyond. So for most of us, that second segment has the highest weighting. What they do is they look at your age and longevity. So let's assume they run the numbers and you're getting that $4,000 a month for the rest of your life. You're 60 years old and longevity is 86. So they say, we're on the hook to pay this person for 26 more years. Then they go and look at the interest rates to calculate out the net present value. And that's how they figure out what they have to give you. So when interest rates are lower, they give you more to try and recreate that. When interest rates are higher, they don't have to give you as much to try and recreate that annuity. So they also, what they do is they do it kind of unique compared to a lot of other companies. A lot of companies do it on an annual or quarterly basis, but Chevron does it on a monthly basis. And they get the average by going and looking at the 3rd, 4th, and 5th prior month to get you that average. So right now we're looking at February, January, December is going to give us the May averages. And what we saw was the interest rates peaked in October, and then they've come down in November, December, and January, but then they've kind of moved back up here in February. So I'll take a closer look here for you. And so if you see the white rows, that's February, January, and December. If you look at that second segment, so the middle column on the numbers, you'll see that it went from, in December it was 5.15, then moved down to 4.98, then jumped back up to 5.12. So those 3 averaged together give us the interest rates for May if you decide to commence your benefits in May. So that right now is 4.86%, 5.08, and 4.88. which is a little bit lower than what it was for April, 4.89, 5.24, and 5.03, and even lower than what it is for March at this point. So keep in mind there's two different dates to worry about. There's your retirement date first. You can't get your pension until you retire. Then there's your commencement date. So if we see a trend, let's say you retired right now, we would likely tell you to hold off and commence your benefits. If you're taking the pension lump sum, this only affects you on the lump sum. Wait till May, unless we see interest rates come back down and keep going down, then we might tell you to hold off later. And again, those changes a little bit each time can affect you. Usually about a 1% change in interest rates equates to about a 10% change in your lump sum. So in this case, that 5.24 down to the 5.08, I can barely see it. That's going to be about a percent change or so, maybe a little bit more than that. So again, it is real money. If you're talking about $1 million, that's a $10,000 increase by waiting one more month, for instance. So any question on here, just give us a call. We'll be happy to run through it for you. But keep in mind, again, that those interest rates only affect the pension lump sum. But it's important to run that cash flow analysis to see what your options are, because in some cases, the annuity is going to make more sense. Or another thing that hasn't been available for a while until recently with the rise in interest rates, or it's been available but just hasn't been beneficial, is looking at potentially taking the lump sum and getting your own personal annuity that may pay better than the Chevron annuity. It all depends upon when you pull the trigger. We have to look at the interest rates and stuff, but there may be private annuity options that might be more flexible and beneficial and possibly pay more. So it's something to look at. But again, best way to look at all this is run that cash flow analysis. So just spend about 10 minutes with us gathering data or updating it, and we'll get that report out to you. And any questions you have, always you can reach us at info@theretirementgroup.com or call us at 800-900-5867. And I'll leave these QR codes up here for just a moment. If you want to schedule an appointment with myself or one of the other advisors, you can use that QR code to get into our calendars. That's going to give you access about a week out. So if you need something sooner, just give us a call. And then there's also one for the LinkedIn page where you can get to our Chevron specific LinkedIn page so you can stay up to date on these interest rate updates, company plan changes, any other webinars we have correlated to Chevron and things like that. So again, this is a quick update. If you have any questions, just simply give us a call. And a quick reminder, even though we've worked with Chevron extensively, again, that does not mean we're employed by nor endorsed by them. But should you have any questions, we're here to help you out and we'll dig into them for you. And again, it's the Retirement Group at 800-900-5867. Thank you very much. We hope you have a great day.